Hello viewers, in this video we'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. In this video we'll be going over the day-by-day probability model, how we found the models, and the forecast for gold miners. So back to the technical analysis. Today we are up 1.5% on the Gold Miners Jr. As for the 1 hour chart, we are approaching positive MACD on the 1 hour chart. For the 4 hour chart, we start to see we're pointing down, heading towards negative MACD on the 4 hour chart. And for the daily chart, we found support on the 9-day moving average in the past 3 days, starting back in January 3rd. So if we were to find resistance, we still have resistance around the price of $42.90. And if we expand out to the multi-year, that resistance also coincides to that level as well. So that is around the price again, $40.90. So that is our first immediate resistance if we were to continue on higher. And as for support, I do see support if the 9-day moving average, this blue line, does fail. The next support will be the 18-day moving average, and we'll fill up the gap between December 24th and December 26th. So we do have a gap up at that level, and we may possibly fill in that gap soon. So again, the resistance, or I should say support, the 18-day moving average also coincides with past resistance. Since we're above past resistance, that now act as our support, which is around the price of $40.55. So if we were to move up higher, that price movement is roughly around 42 basis points, and to the downside it is around 4.7% to the downside. So back to the day-by-day probability model. On here we'll see where Gold Miners Jr. will head to the next coming days. So overall we see some extreme cases to the downside, even several instances down between 11 to 18%. Overall, there is still a high concentration on the one standard deviation down to the downside, 40% near the end, even 71% between 5% to 11% down. So that is one thing to consider, and there is not much to the upside on the extreme cases. 0% to 11 to 18% up. Same thing with 5 to 11% up. Even on the last day or the 7th day, no percent from 0 to 5%. So overall, there is a higher chance of us or gold miners heading down lower. Again, these are one of the extreme cases. I'm betting we may hit 0 to 5% down. So let's head to the forecast model where Gold Miners Jr. will head to in the next coming days. Again, this forecast model is now available in the link below. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to July 27, 2015 to October 20th, 2015. So let me point out why these two charts are similar. So what we have here in the beginning of the current trend, we started off below the middle Bollinger Band, and then we proceeded to touch the upper Bollinger Band at this instance. So let's just mark all the instances where we touched the upper Bollinger Band. We have one there, the next or second one there, and lastly right towards the end. So we have those instances as well, and we have sideways price action in between. So on the trend right down here, or one could say, or one could note, we in between these two Bollinger Bands we revert back to the mean to touch the middle Bollinger Band. So let's go back to the trend in question. We start off averaging below the middle Bollinger Band at this instance. Next we mark all the instances where we touch the upper Bollinger Band. We have the first one there, second one right towards the middle, and one right towards the end for the third instance where we touch the upper Bollinger Band, and between them we have a reversion to the mean to the middle Bollinger Band in between the last two upper Bollinger Bands. So what we have is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that this trend and pattern are the same. The outcome and forecast should be fairly the same. So the model that we just examined was July 27th, 2015 to October 20th, 2015. Back then, gold miners was down roughly around 8.6 or 8.5% down. So that if we go back to the day-by-day probability model, we do see us hitting that range, 5 to 11% down, and that is also considered one of the highest possibilities, so 70%. So I do see a higher chance that gold miners will head lower in the next coming days. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.